Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Good Monday.
Yes, sir. It is a great Monday.
The last week of the month.
Absolutely.
And then we have finished half a year already.
Oh my gosh, it's going way too quick.
So everybody that's listening, Tom and I are doing a series of each type of product, each type of loan, FHA, conventional VA. We're going to hit USDA, some construction loans. Today is all about you veterans. It's all about VA loans. So anything you want to know about VA, we're going to try to handle as much as we can in 15 minutes so you don't look dumb.
There you go. All right. Awesome. So the first question I have, Bruce, is about a lender being VA approved. I'm assuming you are VA approved. I think we've done
100% VA, 100% VA direct lender. We lend
VA direct lender.
VA. Yeah, we don't broker it. We can go directly to VA. But VA does not lend money. They only insure the money that the lender lends.
And I think a lot of people have that misconception that the VA actually lends money, and it's not. It's a loan program with VA backing, right?
Exactly right.
So, and that actually brings up a really good point, because I know that I've had veteran customers just totally confused about this, telling me that I'm calling the VA, I'm talking to the VA, and who they're really talking to is Veterans United, right?
They're talking to USAA or Veterans United that make themselves appear like they are the VA connection, and they're not. And unfortunately, I think a lot of veterans have been misled by their commercials and the way. You got to remember, USAA is an insurance company. They're not the federal government. They're an insurance company. Insurance companies are there to make money. They're there to make a profit. And I think a lot of veterans have been misled to think that they are the VA connection, but they're not.
I think you're 100% right. It's great marketing, a little bit not so clean. But honestly, they're not very good. I dealt with Veterans United, and it was not a good experience. So,
well, we're going to move on from that, because even though you and I are in the business of helping people, let's move on to some more important questions.
Yeah, of course. So VA loans and rates. So talk about the rates and fees versus other loans. Don't get too esoteric, but just in general.
Well, I won't, because mortgage-backed securities are mortgage-backed securities, and VA and FHA loans are lent on a pool called Ginnie Mae versus Fannie Mae and Freddie Mac being on conventional loans. But VA rates right now tend to be about the best there are in the market. VA and FHA are really beating conventional loans when it comes to terms, but that's not always the case. It just depends on what that bond yield does at that particular time. Right now, veterans can take advantage of the market because they are a little better.
Awesome. So let's talk about fees a little bit, because I'm assuming your fees are probably really similar on a VA loan, but there is a big VA funding fee. Kind of walk through that a little bit.
A VA funding fee is VA's version of their private mortgage insurance. So they don't have monthly mortgage insurance. You have a one-time fee called a VA funding fee. And that VA funding fee, the first time you use it, assuming you're putting minimum down, because there's a whole scale if you put more money down, but let's just say you're putting 0 to 5% down, that VA funding fee is 2.15%. The first time you use it, subsequent times, it's 3.3%.
Interesting. Okay, so I was going to ask about being able to use my loan multiple times, but we'll get back to that really quick. All right, so what about being exempt?
For disabled veterans, they're exempt from it.
Well, that's what I was going to ask next. What about being exempt from that? So how much disability do you have to be exempt from that funding?
Usually 10% or more, and you can get some disability. And then when you're up around 90, 100%, you don't pay any funding fee.
Yeah. And fun fact here in Florida, if you're 100% disabled, you don't pay any property taxes either, or at least not the ad valorem taxes.
True that.
Yeah. Okay. So what about minimum credit and income? What's going on there?
So VA is a little bit more flexible, they say, with credit, but all things come into consideration. Loans are underwritten by algorithms, and if your credit isn't good and you don't have any money in the deal, and there's a lot of things that could eliminate you from qualifying. However, VA is very flexible about credit scores. So if I were you, I'd have the credit checked. We start with a soft credit pull rather than a hard credit pull. But let's see what we can do to get your loan approved, because they are flexible.
All right. So now the funding fee can get rolled into the loan, correct?
Absolutely. You do not pay it out of pocket. I've never
Perfect.
seen a veteran pay it out of pocket.
But then what about closing costs? Can you roll those into a loan as well?
Not on a purchase, but you can on a refinance.
Okay. Okay. But we can get seller concessions. And my understanding is there's a 4% maximum, 4% of the purchase price. Is that
So
right?
this is true. VA posts that it is a 4% maximum seller allowed concessions or closing costs. And it's actually not seller allowed. It's interested parties allowed. So even
Right.
if you contributed to the veteran, it has to be included in that 4%. However, it's a little vague. It's a little ambiguous, because you can actually get up to 6%. The rule says 4% plus allowable typical closing costs. So a veteran could include discount points in that other 2% or other standard fees. So you can get up to 6.
Interesting. Okay. So you talked about first loan and second loan. What about having two at a time? Is that allowed at all?
Yeah, absolutely. A veteran can have as many VA loans as they want, as long as they don't exceed their allowable amount. So in other words, you are eligible for up to $806,500. So you could have two $400,000 properties. You could have four $200,000 properties, as long as you haven't exceeded that and you still qualify for the amount that you're borrowing.
Sure.
But no, veterans think that they can only get one VA loan or one at a time. It is not true at all.
Yeah, for sure. And that's a great thing for veterans, and I say veterans, active duty, especially, that need to move around, because I was in the service for a bit and I moved a couple times. My friends moved a bunch. And a lot of times you leave behind a house, maybe you rent it out because, you just can't sell it. It's a bad time in the market or whatever, but you still want to buy another one at your new duty station,
I've been showing veterans how they can actually accumulate more properties faster than the average person can. I can help a veteran leverage properties and grow wealth so much faster than even you and I can. We don't have the ability to go no money down where they do. Now, keep in mind, no money down and VA loans are primary residences. They're
primary residence, but we can talk about the lease program. That's right.
But you can turn it into a rental after you've lived in it for 12 months.
For a year, correct. So what about closing timeline? Because I know a lot of sellers are hesitant to accept VA loans because they hear that the process takes a lot longer.
So the process does not take any longer. Why lenders do that? I think it's because they're trying to compensate for the additional time frame that VA gives the appraiser. So the VA has 10 business days to do the appraisal, which is really 2.5 to 3 weeks, right? If you count holidays or weekends in there. So they've got really about 14 days, and that can throw a lender off. But why wouldn't you have your loan VA approved and without the appraisal in advance? As soon as the appraisal comes in, you close it. I can close a VA loan in 21 days all day long. It's not a problem, but banks struggle with that.
Yeah, for sure. They definitely do. Okay. So the right lender can definitely do it. That's good to know. Now we talked about no PMI, right? We talked about no down payment. Those are huge benefits for a veteran, right? We talked about VA funding fee and lenient guidelines. Those are all great benefits, right? What's the problem with VA? Like, why would I not go?
Well,
VA?
there's no reason to not go unless you're looking at a fixer-upper that's not going to pass VA inspection. So let's say you found a house and it needed a roof, and maybe it has stains on the ceiling and wood rot around the soffits, broken windows, missing screens. Safe, sound, and sanitary is what VA says it has to comply with. And if it doesn't meet those requirements, then VA is going to tag it, and then it's going to have to be repaired in advance. Now, I do offer VA renovation loans. So if you bought a home like that, I got a renovation loan. I've even got a construction to perm loan where I can build you a home up to $1.5 million with no money down, $2 million with 5% down.
On VA?
On VA.
Wow, that's crazy. That is insane. I got to hear more about that. So another small thing that I've heard, a positive thing about VAs, is that they're assumable.
They are assumable, but you have to be very careful because when somebody assumes your VA loan, you're still on the hook and you've used up that eligibility until that loan is paid off. And if that person were to default on that loan, it could put you into trouble. I don't recommend veterans allow people to assume their loan unless it's another veteran. Then they assume it under their own eligibility and then it frees yours up. Now, if you're in a pinch,
so that's a good distinction right there.
If you're in a pinch and you have a VA loan and it's at 2% interest rate and you got to sell that house and somebody can assume that loan and you can't do it any other way, I'm not saying don't, but I'd be very careful because I had a veteran that did that. And then the property got foreclosed on the person that assumed it. And he wasn't notified because of the Privacy Act. And he ended up with a foreclosure on his record for letting somebody else assume his loan that defaulted.
Wow. So so it's interesting because my understanding of if you assume an FHA loan, that takes the person completely off the hook. Now with a VA loan, that doesn't.
It does not.
Wow.
There's still eligibility and there's still a possibility that they could come back to you. So,
but if the person's a veteran, then if the person's a veteran that assumes it,
if it's another veteran, then it's a great way to do it. And here's another thing that I see. People call me and go, I want to buy a home and I am not married, but my boyfriend is a veteran. Can I go on the loan with him on VA? And the answer is yes, you can, but you cannot go 100% financing. You have to pay 25% of half of the mortgage, which if you do the math, that's 12.5% down payment. Now, if you are buying $1 million house and you could get in for 12.5%, that's a good deal. If you're buying, right? Otherwise, an FHA loan or a conventional loan with 5% may be a better deal for you than VA.
Sure. Okay. Yeah. So the answer is yes, but you probably don't want to.
Yeah, I mean, it is done from time to time.
Sure.
I mean, it is done from time to time. People want to use their VA. They got a little bit better interest rate. Maybe the veteran is disabled and won't pay any funding fee. So 12.5% is not that big of a deal.
It's true. That's true. Yeah. So that's why I always say I always encourage my buyers. And I talk to people all the time that aren't pre-approved, that are, I'm going to do that later when I find the house. And I'm always like, you got to talk to your loan officer early, because while you may not want them to pull your credit, which you said you pull a soft credit anyway, but you may not want them to pull your credit right away and feel like you're committed to them. But man, the education is so important to understand. Yes, there's general education. You can watch these videos and learn a little bit, but everybody's situation is unique, right?
Everyone has their own situation. And that's what makes my job so much fun, is everybody's got their own little thing going on. And it takes somebody that knows the system, knows how to navigate the guidelines, knows how to guide the clients in the right way. And so often I'm seeing people get bad information and then they get themselves all tangled up. If you go to somebody that really knows VA inside and out, you're going to get the right information and you probably eliminate a lot of headaches. I've been doing VA loans for over 30 years. So very few things are going to tie me up on it.
Absolutely. And, quick story. We had a loan we closed 2 weeks ago, you and I, and the people, when they approached me, said, I can't buy a house. My credit union turns me down. My bank turns me down. Everybody turns me down. And I brought them to you and you looked at their situation, right? We got them approved. We got them a house and they're just so satisfied. It's amazing. Well, listen, I need to wrap this up. So tell me about VA program. Why should everybody do it? Or why should veterans do it?
One reason why I think you should do it, first of all, don't be misled by USAA and Veterans United and New American and all that stuff. They're not VA. We are the largest VA lender in the country right now, retail, cross-country mortgage. We can help you. So don't be misled by that. You just need a good professional, and you need a great real estate agent that knows how to navigate VA and accommodate a veteran. You veterans,
Preferably one that's a veteran himself.
you want to get in for his minimal amount down, then you hire Tom McNamara to negotiate your closing costs for you. That's how you do it. I got to run. Happy VA. And thanks for serving my country.
My pleasure.